What's up, everybody? I hope everyone had a another okay week and didn't get too massacred. Uh, that was one crazy trading week. But let's go ahead. Let's get right into it. We got the football games coming up here, so I want to catch those. But this is another big week, right? So let's just recap what I said last week. Last week we were right around where were we? 21st. So we were right here, right? So I said, all right, so we're either gonna bounce or we're gonna go down and test this red band, right? So that's basically what my system looks for is like the red bands are the sell signals, right? So you can see up here, this was the area it would signal. Then the perfect rejection off the black. Because the way it works is it goes. This would be the high. This would be the high or low in terms of standard deviation, right? So this is actually a really good example of how my system works, but I'm not going to sit here and claim that this was an easy trade because I went long twice. I got shaken out twice. All right, so I'm by no means, I like to consider myself, this is how I trade. This is my system. I still got shaken out of it, right? But ultimately, it proved itself once again, right? So we came down here, we violated the red, okay? The way then you would expect the red to become support, then you would expect the black to become support. You can see that the red didn't quite touch, pretty damn close, and they also pierced the black, right? This is how I got shaken out, right? So, whereas over here, when it came up here, this is the short spot. You would not have gotten shaken out, right? This is what you normally look for. Another good example here, I'll show you on the 15-minute real quick, is how this works here on the 15-minute. This is just beautiful how this works, right? Here, first buy trigger right here, right? We went up, and just to give you some perspective, like on how powerful these signals are, right? That's a 73-point move you catch right there. Came back down. You want to see the red now, because we violated the red. Now you want to see the red become support. You can see that we didn't once trade outside of it, right? We made another lower low, but we did not trade outside that red band, right? Then we went on, right? So here's the first violation. Here's where it becomes a higher low in terms of standard deviation. We caught it, right? And then, boom, went right up to the red band again, sold off again, right? So 158. So this was a really good week for showing the technical side. Went back down 123 points of my actual system. But I'm not going to sit here and claim that I caught these moves because I didn't, right? Like a lot of these moves happened outside of retail hours. This one was at the end of the day and then it sold off. This one happened late at night, right? So we didn't catch a lot of these rules because I do not trade futures just because I can't sleep. But let me get back to my point, right? So first we violated this red, then red acted as support, and then finally black acted as support. This is a picture perfect how my system works in terms of standard deviation and not price. All right, price is irrelevant. It's all about momentum. All right, that's what this captures. Perfect example on the 15-minute. Little bit more sloppy on the hourly, but you get the daily. You get the drift. Violated it. Support, off it goes, right? So that's just quick little highlight on it. I believe we're at 14, so I got 6 slots left. We're capped at 20. Check out my site antdata.systems if you're interested. It's $150 a month. That's what you're getting. You're getting these signals. You get it on a 15 at 1 hour, 4 hour, and a daily. And it's just meant to give you. It's meant you're using your own stuff. It's just meant for your own conviction as well, right? So, anyways, let's move on and find out what is actually going on here, right? So today we closed. I shouldn't say today. Friday we closed above the 8 EMA and above the 1X Bollinger Band. So this right here, this little green line right here, and this middle line, that's the Bollinger Band. All right, that's a Bollinger Band with a 20 setting, and it's set to one standard, one setting, right? So we closed above this, right? But we closed below the 200-day moving average. Okay, so this is really very, very, very interesting spot, right? So we're going to switch to the other volume profile chart here in a second, right? But we did not close above the 200-day moving average, which to me that's kind of weird. All right, just the fact that we closed so close to it but refused to close above it creates a little bit of hesitancy in the markets. That's for damn sure, right? So let's switch back over here, and we're using the 4-day chart now in the volume profile. And you can see what I did is I adjusted my levels a little bit, and I got rid of the pre-existing volume profiles. And because this is the first 4-day candle, 26th January, and that closes on Tuesday, right? I mapped the volume profile here. All right, so this is what we got. Now, right now, you can see that we closed back into this range here, right? So this shows some sort of like hesitancy, right? It would have been way better if they closed it like in this range, because we would just we'd rip, right? Because that's closing in this bars range, you know, is the bullish momentum towards the highs, right? We did not do that. We closed that back in this range here, below this previous all-time high, and while we were still making a higher low on here before it ripped, right? It's kind of a hard concept to explain, but this close is very important, right? Also, if we look at from this high all the way to, you know, today, we did not close into the value area where 70% of all the shares trade, right? We didn't close in there, right? Because if we closed in there, that's suggesting, all right, acceptance back in this range, and we go up and we would go to more interesting areas, okay? So I just want to kind of point this out because it was a very weird, it's a very weird spot to close, all right? Like we're still closing in the bearish range. So, I mean, I want to point that out, right? This is the bearish range. On the previous run, we also did not close into the bullish range where it went to new highs. So, I mean, technically, what this is saying is, you know, bears are still in control. That's what this is still saying, right? Now, I apologize, as I said, we're closing. This actually hasn't closed till Tuesday. All right, but you could look at the daily; it's going to be the same exact thing. All right, so basically by Tuesday, we have to be back above this candle here at 44.50, basically 44.46. It looks like for bulls to have some semblance of control, and then you really need this 44.40 to be support. So. It's a very weird spot to be, right? Lots of, you know, there's bullish confirmations and bearish confirmations here, which that always sucks when you're in the market, because usually it's nice to have a nice trend, right? So right now the trend is down, and right now the bears have not lost control. I want to preface everything by saying that. What I'm going to do now is I'm going to explain that if the bulls are in control, where we're about to go. The first real thing here is this test right here at 44.37, which you can see that's where we rejected off of, and we closed right below it, right? They didn't close it back into the value area. So I mean, like I said, that to me that's important, because I use volume profile a lot, but there is still 2 days left in the candle. So once they get back above this spot, we're going to really quickly move up to this 44.77 level. And if we also are looking right here, like right above where we're at. It's like sunny skies, right? And this 4477 level was the original level that I had from the down side, right? And that may or may not prove to be resistance. We went right through it. Like it acted as support for maybe like an hour. So this level actually was not nearly as prolific as I was expecting. I was expecting this to be a major support level, and we just kind of like, you can even see the shares traded, right? If you look at the volume profile, right, the larger these blocks, the more shares traded. We didn't really trade much around here. This is the lowest volume area of this entire drop down, right? So because of that, I also probably expect this area to not really be much of a resistance either, right? So we can go ahead and get rid of it, right? But this whole area from here, this 4560 to 4436 is a very important area. So I think that if we start trading back above here, 4437.50, that means that we are going to get an opportunity to come up to 4560, right? At the very least 4520 area, right? If we look here, we have the 20 SMA at 4525. That's a big one. And then right above it's the 50 week at 4560, right? So it's always interesting how the moving averages line up with the volume profile areas, right? And the reason why is because the moving averages are just based off of price, wherever price closes, right? So volume's got a lot to do with price, obviously. Anyways, it all matches up, it all lines up. So this 4520 is equatable to the 20 SMA, and this 4556, 4560 area is equatable to the previous support areas, right? You can see that the bounce from this 4520 closed above here, then it went on to all-time highs, right? 4560. So basically, this 4560 is going to cap any upside if you're a bear, right? Basically, above here, 4556.75 this week, close above that, we're getting new all-time highs. That's what's going to happen. Above 45.60, we're getting new all-time highs. Otherwise, if this goes up in trades for like a day and then rejects, you know, we're going to go back down, probably test the lows, right? Support sort of depends if we can get up there. Because again, we're at a spot where this is not guaranteed yet, right? So while this is a very juicy looking candle, you know, and let's check out the daily candle, right? Still closed below the 200 day. You know, there's still a lot of, you know, didn't close back in the range, right? There's still nothing that says that this is a guaranteed trade yet, okay? But if this does trade, like if Monday the bulls, you know, do what they need to do, and this does trade, this is the area bears are going to want to defend, all right? Because, and we might even get like an overshoot. You see how the selling really started here. We might even get like a same day. Let's say that this trades on Wednesday or Tuesday. All right, this 45.60. We might get a same day run up to 46.10 that rejects and closes back down here. All right, I'm just to clean this up a little bit, right? To get back up towards this. It's hard to say, right? But that would be a same day intraday rejection. This is something I would actually short. I would short this 46.10 area to 46.20. And then I would hold that short if it closed back down below here. But this is not guaranteed, right? Because of where we closed. So if the bulls, you know, basically we need to see Monday. If the bulls can get back in above here, 44.40 basically is the magic number, then we're going to look for 45.12 to 45.20 to trade, and above there 45.60. If bulls are super lucky, they'll get an overshoot to 46.10. All right, but that I would not expect 46.10 to be, you know, I would expect an intraday rejection just like this wick, right? This is what I would expect. So long story short, if the Bulls are able to take control on Monday, then, you know, we'll be able to see this 45-60 next week. 45-20 to 45-60. Heavy, 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 heavy resistance here. Okay? Now, if the Bears are still in control, in which I've said they are, right? Because there's nothing yet that's invalidated the Bears being in control. So I have to keep saying that because it's true. We don't have the closes we need, right? So that's why like Monday's going to be so critical, because we need to see what happens, because I don't know yet, right? I need to see Monday. Once we start closing back in this range, all right, this is going to trade. Okay, so that's what's coming. And then this area is going to be the short if you're still bearish, okay? But if we close above 45.60, we are going to get a squeeze like no other. And again, I'm talking about a daily close. All right, if we, let's say on Wednesday we daily close above 45.60, and Thursday they don't negate it, right? Then we are going to run to all-time highs. That's what's going to happen. So this is the super critical area here that's going to determine, you know, whether or not, you know, we collapse into February or not, right? So that's kind of what I see here. I can't say, hey, this is going to happen or this is going to happen, because I don't see, you know, we didn't get the closes we needed, right? Above here, above 45.45, I am, which is actually where 44.46 is where the high of that 4-day candle was. Very bullish, right? We're going to see probably 45.60, you know, like a very, very high percentage chance it's going to happen. 80-90% chance this is going to trade. Below here, bears are in control, and we can see new lows, right? So that's kind of the story of next week. Downside targets would be the red band again, 42.16, and then a daily close below that, you know, probably brings 4100 or so, 4120, right about here, give or take, would be equivalent to a candle like this. 4120, maybe even 4040, but that's, you know, we can't really talk about that till we see Monday. But if that is the case, those are the downside targets. 4120-ish, maybe slightly higher, 4160. It's hard to say. It's incredibly hard to pick bottoms, all right? Especially, you know, like I use my system to pick bottoms, and we would be trading below my system, right? So it's very, very hard for me. So 4120, 4160, if bears can get, you know, the momentum directly from here. All right, so Monday is the day, right? If bears retake control, there's going to be panic. I guarantee that part. If bears can close it back like below 43.47, 43.30, you can see this is the 50 or the 30 moving average. It's going to be hysteria where we're going to plunge 200 points. All right, so it really comes down to Monday, right? Either we're going to close above that 44.40, or we're going to close below 43.30. In the sense of like those are the two things that are gonna move us, right? Close below 43.30, very, 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 very bearish. Expect to see 41.60, 41.20, maybe 40.40. All right. Close above 44.30, expect to see 45.20, 45.60. All right. That's it. That's the place, right? So 44.30 or 44.40 and 43.30 are the two most important levels. That's all I got, guys. Hit me up on Twitter if you got any questions. Enjoy the games today.